Switzerland has to get there. Either the AG structures, it's not really built for a startup that raises financing rounds. We need to create some sort of a startup AG version. We don't even need 2 years for that, right? We could do this in a month, right? We could just set up a new type of entity that's a startup AG.
Welcome to the Swisspreneur Show, a podcast about startup stories and learnings from experienced entrepreneurs. If you enjoy listening to our show, make sure to follow the podcast and leave a rating. And now, here's your host, Sylvan.
Welcome everyone. We are back here with a new live stream, and I quickly need to adapt our layout. I should see right here. So we see all our three guests. Here we go. Welcome back to another Swisspreneur briefing. This time in February, we're going to talk about what happened in the Swiss startup ecosystem over the past week since we last met. And of course, we have our resident guests here with us today. Sophie, the founder and managing partner at Vitamin C, where she's investing in early and climate impact-driven startups, and Laurent, co-founder and co-CEO of Holy Code, working closely with startups and scale-ups across Europe. Thank you so much for being here again with us. And as you know, this episode is also sponsored by our partner, by the Swiss Startup Days, the leading Swiss deep tech catalyst event taking place on May 21st in Bern. Tickets are out now, so check out startupdays.ch to save your spot. Sophie, let's kick things off right with you. We were here back in January, just a few weeks ago. Now it's February, a few weeks have passed. Before we get into the details about what happened over the past weeks, how are you feeling about the past 3 to 4 weeks since we last spoke?
It's crazy to think it's just 4 weeks, right? So much happened. I know this is not a political podcast, but yeah, it was kind of a sad month for the US, right? I'm living in San Francisco. So yes, it has been intense, the happenings the last few weeks. But there's also some, I think, optimism coming back, that we have seen that there is a lot of resistance coming from the people living in America, but also even in the Republican Party, that not everyone is accepting what's happening in the country. So I hope we're reaching a turning point, actually. So I know we're not a political podcast, but I can't talk about, about what's happening with excluding that. And then more on the tech side, I'm in the capital of, the AI boom and the AI gold rush, right? It's interesting, the pitches I'm hearing and the conversations I'm having, it feels like we're starting to shift from the AI enthusiasm into the AI realization and optimization bubble, because everybody is realizing the cost that this is generating, interference, that we're needing to optimize things, that we need to come down, that we need to talk about efficiency. And that, of course, is our discussion around energy efficiency, which is the real bottleneck, right? It's not the AI applications, it's actually how we're powering all of this, data centers and then energy. And I'm a climate investor. Of course, energy is one of our biggest topic. And I'm actually excited that we're now reaching that phase. We're actually talking about climate tech and renewables and the energy bottleneck. And I don't know, hopefully in 10 years, we'll realizing this is actually the area we need to invest, right? This is where the bottleneck is. So I'm also excited launching the new fund.
I'm sure. Yeah. You've been busy, and it's incredible what you just said. It's like just a few weeks since we last spoke. It's crazy how much can happen in a short time.
It just feels like time is accelerating. I don't know how you're feeling, Laura and Silvan, but for me, it's like, wow. Yeah. We're talking about new things every 2-3 weeks, Yeah.
Yeah, Laurent, looking at you, the headlines, we will dive into them in a second, but the headlines are basically funding's up, things look great, early stage is booming. But when you look past the numbers, is there a thing that surprised you? Maybe over the past 3 to 4 weeks since we last spoke? Something that really was like, wow, interesting.
That's a good question. I wouldn't be as optimistic as you are right now. So on one side, let's say for Sophie, probably this is currently the best place, right? Because we're finally talking about energy store and how climate change is going to be impacted with this. So for you, this is a boost to whatever you're doing, right? For us on the side of more on the development side, tech side, it's a fantastic boost in productivity, but at the same time, it's also a massive change in everything that we are doing, right? So that's the first thing. For us, it's a bit more ambivalent where we're going with this. First of all, it's so crazy what we can do now, but at the same time, does that mean everyone in our company still has a job? And can we, how many more clients are there? And questions like that we're asking ourselves since a year, and it's just accelerating at an immense speed. So super exciting, but at the same time also somewhat worrying. And then, you say funding is up, assuming you're referencing the report that we're going to talk about later a little bit, but it's not that much up. It's just stabilizing. So I'm not celebrating this at the moment, and I don't want to be a party pooper, but I want bigger things for us in Switzerland or in Europe. This is not enough for me. So what has surprised me, probably that there's a lot of positive talk around it, which is good because we have to. But at the same time, I haven't heard enough voices saying we need more. This is not good enough. We need more. And that's what I want to hear, honestly.
I was like edging to write a post, honestly, the whole last week, because I was reading all these, 2.9 million in Switzerland, it's up. And I was like, it's a fraction of what we need. And I really, just like you, I didn't want to be the party pooper either, because I also want to be the one that, hey, it's great and there's so much potential. But really, this should be, if you compare it just in terms of numbers, like with the US, we should be 4 times higher. We should be talking about 10 billion, right? If we talk about Silicon Valley here, it's like 100 plus billion, right? I mean, this is the scale we're competing at. So I think, yes, I'm with Laurent. It's good that things are going up, but they should really be much higher. So
I love that spirit. That's exactly why we're talking together. We need to look behind the numbers and also do some real talk here. So to give people a bit more context, so we can really dive into that first topic that we will address today. The Swiss Venture Capital Report has been released last week on Tuesday, February 3rd. And the funding, it's flowing again. It was basically recapping from the pre-COVID days and making ground to former levels, not the highest we've ever seen, but it's going up. Overall, there were 2.95 billion Swiss francs invested in 2025. And overall, there were larger rounds on average, but across fewer companies. So that's sort of a bit the context. And if anyone wants to download the report, just go to startupticket.ch to check it there and download it there. So Laurent, on paper, we already looked at this, right? It looks great on paper, but you also say, we need to do more. We need to do bigger rounds. We need to do more rounds. We need to have more funds invested. So how do we get there? How do we focus on not being, oh, great, we grew a bit, but actually not as much as we maybe should have? What's this mindset here?
I think we're doing a lot of those things right. It's just we need to amplify it more, So we will also talk about it afterwards, what the Swiss Startup Association came out with in terms of policies or wishes for the startups in Switzerland. I think that's one of those puzzle pieces that we need. And it's great that it's going upwards and we're going back on track. Like the trend change is amazing. So these are the right things. It's just we need to set really ambitious goals like every founder does, right? So we need to have a moonshot goal or a Mars shot goal or whatever you want to call it. Something that is really shakes everybody in Switzerland and maybe also in the EU, saying, okay, this is what we need to get to. And then we need to break it down into milestones that are actually achievable or should be somehow achievable, and really go after those, right? I mean, yes, you said it, the funding is up. Obviously, it's still concentrated on a few very big rounds, on a few companies basically, but that's also the case in the US, if I'm not mistaken. So you will always have this power concentration, the power law that's going to happen. So I don't think that's necessarily a bad thing. The things that I saw that I really liked is that early stage rounds are up. Once in size and then also in the numbers. So this is what gives me hope that there's going to be more fuel in the next 1 or 2 years because there's more coming. But what is still the case is later stage rounds, they're not that much bigger. So the topic we talked about last time, 4 weeks ago, where we were saying we need bigger, faster rounds, this problem is still exactly the same thing, right? So I don't want to overhype it. Yes, there is some sort of turnaround. We're going in the right direction again, but it's too slow. We need to do much more. And I think what we should do first is set a super ambitious goal, like maybe Sophie said. Let's talk about how do we get to 10 billion investments in 2 years? How do we do that? I don't know yet, but how do we do that? How do we get everyone in Switzerland, pension funds, the government, all the private individuals that have a lot of money, how can we get everyone behind this and really make them understand that this is where we need to go? 10 billions in 2 years. That would be my goal personally.
And the crazy part is the money is around in Switzerland, right? We have the money laying around. It's just not being invested. Before we go there, one follow-up question for you, Laurent. We see still a bit of a higher concentration on fewer rounds compared to previous years. Do you think that this is also happening because of AI, that companies say, well, either I stay bootstrapped and I want to be profitable and the smallest possible, or I want to go really, really big. I want to be the category leader. And therefore you see less of these mid-sized rounds, and you probably have more capital flowing in just a few companies that actually want to take this moonshot. So does AI play a role in the concentration that we're seeing in the data?
I think, yes, it does. But I would say from a different perspective, yes, obviously there's now with AI, you can build much more yourself and you can bootstrap much longer. That's true. But I think that's not what's driving this at the moment. I think what is driving this is the hype cycle. You know, everyone wants to get into the AI now. Everyone thinks AI companies are now the hottest thing. We've had that a couple of years back around Corona, where suddenly the valuations went crazy. And I remember talking to very good friends of mine in the VC world that were saying, these valuations don't make sense. I'm not investing at the moment. I'm getting shitload of pressure from my investors, but I'm not doing it. And those guys were in the minority, but they were right. And I think the same thing is now happening in AI. There are some companies that are absolutely crazy skyrocketing and they cannot understand how you can get to so much ARR so quickly. So they deserve it. But then every investor wants to jump on those companies. And that just drives valuations to the point where it does not make financial sense anymore. And I think we will be in for a hard landing for quite a few of those companies. But it's just a normal hype cycle. We're going through this as an industry every 5 or 6 years. And I think it's happening right now again. Yeah.
That's part of the game. And Sophie, if you look at your work, I love this perspective. We have Laurent as the entrepreneur, Europe-based. We have you as an investor, US-based. So when capital concentrates like that, not only in Switzerland, but also across the pond in the US, what tends to matter most in deciding who actually gets funded besides the hype and all the FOMO that is taking place?
Yeah, I think it's exactly how Lauren is describing it, right? We're talking about FOMO valuations, right? People are trying to jump on it, right? So, and I don't think this is ever a good decision, right? The good decision is to be where no one else is, really. And but that needs people that have, the guts also to stick to a specific strategy, to not follow the hype cycles or fall into that trap that is exciting. I'm feeling the gold rush too. And I'm also looking at AI startups, but it's really for us more around who is really creating long-term value, right? Who will be around the next 15, 20 years? Who is building something that has like a vertical integration, right? Like when we're talking about AI for us, for example, like can we see really interesting use cases for great optimization using AI? Like there's so much potential in it, but is it something that creates a long-term value that is beyond just that current hype cycle we're in? And yeah, I agree, right? Some people will make lots of money, but many more people will lose a lot of money, right? And so, yeah, you got to be smart navigating this and just stick to your beliefs and your like what you actually care and what you as an investor focus on, and not get sidetracked by the FOMO hype,
Yeah. And I feel that's exactly what you are doing, right? Because climate tech overall is probably a bit less in the
it's not
hype
very
at
trendy,
the moment.
not very trendy, no.
But you stick to it. It's more important than ever,
I
you stick to the
think it's
plan.
more important than ever. And believe me, in 10 years, everybody, that was the time we should have invested in renewables. Like I'm saying now, right? We're seeing that, Google just invested 4 billion to buy data centers, including the utilities. So big tech providers are going to be energy producers, right? So we're really reaching an era where we're realizing that energy is the bottleneck. I mean, that's why we're also, trouble Venezuela, Greenland, right? Like it's energy, that's where the fight is really happening. So when we can invest in technologies that are renewable, that are abundantly available, that are eventually cheaper, like we're already seeing with like solar and wind, right? These technologies are not just greener, they're actually cheaper and more efficient, right? And there's a next generation of technologies. This is going to be the future. And betting now on this, we'll see in 10 years, right? I think you'll make money there and not on another AI agent for, your Salesforce. That's my belief.
Right, as they say that the energy that you have available, that equals the intelligence that you can get in power, basically. So in that sense, energy is the ground for everything that's being built up on it with that technology.
Yeah, and the tech players know, right? That's why Google is buying utilities now and data centers. It's that. Yeah.
Laurent, from a founder perspective, if these rounds get a bit more selective, it still seems that for many founders out there, it's still a big challenge to actually raise funds in the current environment. So what would you recommend to founders to rethink? Should they focus more on being bootstrapped, for example, versus raising VC money? Or when does it make sense to actually double down and go really, really big and try to get as much money as possible because just the environment is so favorable if you're an AI startup these days?
Yeah, I mean, I think it's an amazing time to be alive in terms of what you can build now. Me coming from the software development area, it's just absolutely crazy. Nenad, my co-founder, he built 3 applications in the last 3 weeks. That would have taken us 6 months each a year ago. That's just, I cannot get my head wrapped around it. I was saying it for 2 years that this is going to be possible, but now that I see it, that my co-founder is actually doing this, it's blowing my mind. So bringing this back to your question, I think it's an incredible time to be a founder and bootstrap your way. Because if you have someone in your team that is a bit techy and can, a bit more than a bit techy, but is techy and can understand these things and can really build it, you can ship stuff that was not possible 12 months ago. You can iterate your company 5 times before you end this quarter, for example, right? So you can get yourself a lot further with a lot less money. And I think that's the magic right now. You don't need investors' money in most cases. I mean, there's obviously, I'm talking now about sort of SaaS AI companies, but if you go into robotics, you will need money, that's for sure. But in those areas, in the capital non-intensive areas, you will be able to get a lot further. And then based on the numbers you have, not just building a prototype, but actually showing ARR, showing massive growth, showing product market fit, you'll probably be able to then raise money on that. But the moment until you can get to raise money is it's a bit further out. You need to do more now to get to your first round than you had to do a year ago, because the bar of building has just been reduced by so much, right? So I think investors are looking at that, and they're investing when they really see that you have massive growth and that there's something there that is more than just an idea on a pitch deck, because that was investable 2 years ago, and I think it's not anymore. It really isn't. You need to show proper traction in the market. So I think it's not by choice. You have to bootstrap longer. You have to prove that you're building a business that actually works. And then you can just raise bigger rounds and it will go much faster. I mean, that's what we're seeing everywhere. If you hit the sweet spot, you're off like a rocket. And yeah, it sort of tingles in my fingers to try myself again.
I totally understand. And I think it's a very fair take that you make. It's not because of AI why we might think it is, but it's actually AI enabling you to ship faster, validate more. So you can just delay the fundraising part. And then basically as a result of that, if you succeed, you raise bigger rounds in the end.
Absolutely. I mean, what we are building for our customers now for 10K, a year ago would have cost 120, 150K. So you can get so much further. And I mean, there's still a reason to work with companies like us because there's some expertise there and we can help you get there faster. But you can get so much further with so little money. It's incredible. And I don't know where this is going to end, this journey, right? I mean, what's happening 12 months from now? I don't know, but I want to see it. Yeah. So let's get there.
Absolutely. Now, despite looking at the funds invested in the Swiss Venture Capital Report, there's also another angle I would like to focus on, the new funds in the market. So beyond the pure startup investment rounds, we also saw some major fund activity. B2 Ventures, for example, closed a 150 million euro fund. Constructor Capital launched a 100 million debut fund. Others, I think VI Partners, etc., also set up new funds. So, Sophie, from an investor perspective, what does the arrival of new and, for at least for Switzerland, larger funds actually change for founders? Does it increase competition for deals, or does it mainly raise the bar that you now want to do bigger tickets and therefore you need to have more traction to convince the investors?
I mean, first of all, it's great news for founders, right? The more funds that are out there, the more competitive things get, right? So hopefully we're getting to a place where actually founders are more in charge and can be more selective with what fund that they want to work with, right? And more competitive also means that investors need to start thinking about actual value that they're creating for founders, right? That is beyond just capital. Like, oh no, if you work with me, I can help you on this end, or I can help you do BizDev, or I help you in my US connections, or whatever the value add of a fund is. So I think for founders, that's only good news. But yes, in perspective, right? Like we said earlier, right? We're still talking small scale, right? These are 100 million funds. Here in the US, we have lots of seed funds, True Ventures, Sequoia Seed, Besmer, they're somewhere between 360 million funds, right? So we're still on a smaller scale, but I think overall it's good news. And hopefully that means bigger rounds and also faster rounds, right? Because when it's competitive, then you got to move quicker, right? And I think now Switzerland is suffering from not enough competition. So certain rounds can take forever. Investors are taking forever because they're the only one that they're talking to, or there's the only lead investors, right? Here it's like 2-3 term sheets, bam, 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 right? And then the round can be done in a couple of weeks. And that's where we need to get, right? Also for founders, so they can go back building. Like Laurent said, like now you can build something in 3 weeks. So what if you're wasting 6 months talking to investors, then you're not building, right? So, and then you're out.
Fully agree. There's one thing that really sticks with me every time I look at these rankings or other good news that are being posted on LinkedIn. They usually say, oh, Switzerland is number one on the per capita ranking. And I'm like, how do you just look at it from a per capita basis? Because it's, in the end, it's pretty much irrelevant. It of course, it's nice and you're number one. But then as what you're saying, Sophie, is like, it just doesn't matter too much compared to the big funds in the US. They are a magnitude bigger than everything we have in Switzerland. So sometimes I feel when you open LinkedIn and you look at the rankings and everybody is celebrating, it's a bit like, why? It's like you sort of support a good cause, of course, but why are you celebrating? We still have so much more homework to do.
Yeah, and it's really interesting. The conversations are so different when I talk to, I mean, we are a small fund, right? We're a $50 million fund. Like if you're talking to other funds that are in the 100 million or sub 100, there's always like, how do you get into a good deal, right? Like, what do you do? What is your competitive edge to source, right? Like it's so highly competitive that you really have to have an edge. And I don't see these conversations in Switzerland very much, or I'm not part of it, right? It's just not that same kind of density of investors also. And I think in the end, it's only good for founders.
Fully agree. I feel we also see that in sports, for example. You look at the competition in sports, in ice hockey, for example, right? In the US, if you don't perform, they send you to the farm team the next day. In Switzerland, I know a few like very professional guys or people who work with the professional guys, and they say, they're very comfortable. There's not really happening anything if they don't perform for a few weeks. Maybe the contract doesn't get renewed, but this lack of competition also makes you a bit comfortable and you probably don't bring your best game. So I feel that's very good news that there is hopefully an increase in competition. And switching with that question to you, Laurent, what does that mean for founders from your perspective? Is an increased competition on the fund size and the funds in general, is that a good thing for the Swiss founders?
Absolutely. Absolutely, can only be good for you. You know, I remember when we raised the first round. Well, Dandila was not there for the first rounds, but at Movu, when we raised the first rounds, there were probably 10 funds in Switzerland that we could go to that would potentially be willing to invest. So there's not a lot there, you know, like 5 of them will say from the start, yeah, probably we're at the wrong time in our fund at the moment. We cannot invest in you anymore. Okay. And then you're left with 5 funds. I mean, we were lucky that 2 of them actually said, actually, this is a good case and we go for it. But as Sophie said before, more competition, bigger funds, more participants is always good for the founders at the end of the day. You will have a higher chance of finding the right fit for you. You know, and I mean, we have to also be careful that we're not coming across as Switzerland or Europe bashers here. I mean, at the end of the day, we all know that there's a lot of things that are fantastic over here and that we all appreciate, and why most of us, Sophie not, but the rest of us are some part of the year living here as well. So there's a lot of reasons why Switzerland is fantastic, but I think that's also the problem. Switzerland is so fantastic that it makes us lazy. We don't have the same competition. We don't need to fight for basic things as much as other places in the world. And that makes a lot of us too comfortable, as you said before, right? I had a discussion yesterday with an investor, a venture capitalist, who said what he does not like, that's not so much Switzerland, but more US side, is that he says, look, the secondary transactions that are happening with founders, and I think we touched on that the last time as well, where I said you need to do that earlier in Europe, right? And he told me, yes, that's true. But what he does not like at all is in the US, on the other side of the deals, it's happening too much. In his opinion, when he looks at the deals, you know, Series B, Series C, the founders are getting so much money out of secondaries at the moment that he says they're not hungry anymore. Other parts in the world, they're probably going to be much more hungry to really build those category defining companies afterwards, because they're already setting up their own funds left and right and starting to invest. They're not focused on this job anymore. So I found that an interesting perspective, you know, because we were saying last time, we need to do more of that earlier on. But then at the same time, someone else is telling me we're doing too much over here. I'm not sure, Sophie, if you also see that, but that was interesting. Yeah.
It's very interesting. It's the balance, right? So if you want to add something here.
I just wanted to say exactly that, right? With so many things in life, right? It's always a balance. And I also want to say, I don't want to come over as Switzerland bashing either. I love Switzerland, and I spend, my entire time thinking about what can we do to get it even better, right? Because I do think like the potential is just amazing that Switzerland has. I just still don't think we capitalize fully on it. And we're not really aware of how big of a player we could actually be. And so I think it's more that it's like unutilized potential, basically. Yeah. It's not that we're like bashing. We're just like, hey guys, this is amazing. Go bigger. Like that's
exactly.
Really the message. Yeah.
Go further, go bigger, go faster. Basically, that's what we're aiming for, not bashing at all. And so if you look at these new funds that now are being set up in Switzerland, I know, again, compared to the US, they are not that big, but still it's a significant improvement for the Swiss market, the ecosystem. When you look at the funds of this size and the size of the Swiss ecosystem, where does that capital go to? Where does it concentrate first? Is it all going into AI because that's sort of the narrative right now? Or where do you see the focus of that newly raised capital being deployed first?
I don't know. I would have to study the thesis of all these funds, right? But I clearly think that AI, automation, spatial AI, like that new optimism is helping these funds also raise capital. Right. So I think it's the entire chain, right? It's like founders are excited about the productivity gains and what's possible. Investors are excited that they can be part of this. And then LPs into funds also want to be part of this. So I definitely think that this is the trigger of these funds now raising and closing faster, where it's actually going to deploy, because I think the AI optimization part is in all the sectors, right? We're seeing it in biotech, we're seeing it in hardware, we're seeing it in software. So I think it's across the industries.
And there's not everything is rainbow and sunshine at the moment. If you look at just about a week ago, there was actually quite a big sell-off of SaaS stocks in the public markets. for probably many reasons, but one of them being the fear of AI, that AI, exactly what Laurent just described, you build what took you 6 months in a week now. So how is the current sentiment in the US about software as a service in general? Are they afraid that AI will basically ruin their business to a certain degree?
Yeah, of course, of course. And now you have to either like switch completely integrating that, but you might never compete with a company that does that has a native AI approach, right? So yes, of course, there's big fears. Yeah.
But nevertheless, I mean, in the software as a service offering, like let's take Salesforce, for example, or HubSpot, it's always a bit of a love-hate relationship with the CRMs, but often they have so much thought and testing and real user data put into these platforms to cover very specific use cases and also bugs that maybe the AI would do and would have in the first version. Isn't there still sort of a great reason for existing, and maybe they will even accelerate with AI instead of being sort of losing market share?
Yeah, and they also have a lot of big customers already fully onboarded, right? So that's also a big thing. Like, are you now just going to switch to an AI native CRM and like move my hundreds or thousands of people over there and take the risk that it might be not stable enough, right? So I think there's lots of that. I mean, we were choosing now our own CRM, and we didn't go for Clarity, which is an AI native Series A startup. I tested it. It's way too many bugs. So we're not going that route. Maybe we're going to regret it in a couple of years, and we're a 3-organization company, right? So think about customer like with a few hundred or thousand employees, plus with data that is, that needs to be reliable, that needs to be private. So there's also those concerns, right? So
Exactly.
Fully agree. And I think what happened last week in the end was not the stock market being scared that SaaS is going to disappear. I think what it really happened is the stock market anticipating that the baked in 20-year guarantee that this SaaS model is just going to pump out cash year after year after year, that is gone. I don't think, as Sophie said, this category will not disappear. SaaS companies will find a way to use AI to enhance their product. It will still remain relevant. But there's a clear case that there will be a layer on top that is some sort of AI platform or some sort of AI integration that actually is going to build on top of this, which will then take a lot of the profitability of these segments. But it doesn't mean that SAP, for example, is going to be gone in 10 years from now. I honestly, I might regret that, but I honestly do not believe that this is going to be the case. And I think that's simply what happened in the market. They didn't say HubSpot, Salesforce, and these companies are worthless, but what they said is there's too much uncertainty that in the next 20 years we can expect those companies to grow at the same rates, and that fear is basically what they've priced into the new setup, right? And it's probably a bit an over exaggeration at that moment, but it's just a natural adoption. And all of the stock market realizing this really tells us that we're either peak hype cycle or there's a fundamental shift happening here. And I believe there's a fundamental shift happening at the moment.
Yeah, I agree with that. And basically what you're saying is that
isn't it both, right? It's a fundamental shift, but we're also in a hype cycle, right?
Probably,
It's literally
probably,
both.
you're right, yeah. It's clearly both. You're right, yeah.
I feel we haven't seen the top of the hype cycle yet, although it feels like it. But I feel there have always been corrections and sort of different narratives that sent the stock market tanking again. So I think these are healthy corrections. So you really question the things, and then when you get more data and you see, oh, this is actually a big shift. It increases productivity, etc. Then the stock market goes up again. But I think we have not reached the peak in case that's being a hype in that sense.
So let's do a future prediction, and then we see how it holds up. When is the hype cycle maximum reached? Is it 6 months, 12 months, 2 years, 4 years? What do you say? I'm going to go for mid next year. So mid 27, 18 months from now, we will reach peak cycle.
Mine would be 24.
Okay, I'll say faster. I say end of this year.
Nice.
Okay.
Just so we have
It's good. We have different opinions. So
we need one to collapse, right? It's always like a domino, right? We need one OpenAI that struggles for whatever reason, right? Something like that.
I heard a very interesting take in a finance video yesterday where the guy said He thinks that OpenAI will not manage to go public as they plan to be. He thinks that the IPO will be cancelled of OpenAI.
And this will be a problem for the company. So that could be.
Yeah, we'll see. That could be a trigger point. Let's see. Let's see. So before we continue with the third topic, a very important one, the Startup Agenda Switzerland, I just want to give a quick shout out to our sponsor, Startup Days. I already mentioned them before at the intro. So they are sponsoring this episode and they are taking place on May 21st in Bern. So if you want to participate in the leading Swiss Deep Tech Catalyst event, head over to startupdays.ch and save your tickets. We're also going to be there with Swisspreneur. Holy Code is for sure going to be there as well, I know. And maybe even you, Sophie, with one or two people, who knows?
Not me, but the rest of the team. Yes, absolutely.
Fantastic. Great. So head over there now and book your tickets. So we have one more topic I want to talk to you about. It, I think, just happened last weekend. The Swiss Startup Association basically published the Startup Agenda Switzerland. You can also go to their website and download it. It's a very nice paper, beautifully designed, and very important topics and quotes in there. So basically, they say we need to change things on three core pillars: the talent and labor market, the capital and financing, and the government efficiency and regulations. Laurent, from a founder's point of view, I'm sure you also have seen the publication, probably even read it yourself. Where does this agenda line up with the problems that you see as a founder or from the founders that you work with today?
I would say yes, yes, and yes. Like all of it is extremely relevant for us founders at the moment. I mean, talent and labor market, you know, if you're not from Switzerland, you might not know that, but it's not that easy to get talent into Switzerland if it's outside of the EU because of the restrictions that we have in our country, right? And they can come in for studies, but afterwards they're not allowed to stay around for the job. And then you bring amazing people to EPFL or ETH, they study there, and afterwards it's almost impossible. Well, that's an over exaggeration, sorry, but it's sort of difficult to make sure that they can stay in your company, and you have to do a lot of paperwork, and it's a long process. So yes, I fully agree that this is something we need to tackle. And then the pension fund topic, we've talked about that many times. We need pension funds to actually buy into this asset class that is called venture capital, startups, private equity. We need more money to flow in there so that we get to the 10 billions in 2 years. And the government efficiency and regulations, I mean, we are lucky in a sense that Switzerland is fantastically stable. We have very clear processes. It's not one day you get an answer that is different to the next day. So that's fantastic, but it's too slow and it's too much work. And I mean, when we set up the company in the US, the sales entity over there, that was such a fantastic experience. It went so fast. It's so easy to do it. Yes, okay, the lawyers cost a little bit more even than in Switzerland. That's true. But other than that, it was just an amazing experience. So all of these points I fully second. We need to work on them if we want to get to what Sophie also said, a much, much brighter future for the startup ecosystem here, because we have the talent. We just really need to be able to execute along those lines.
To me, it's like the most stupid thing ever. You as a country, you pay for the education of people that come from outside of Switzerland. And depending on what they study, these costs are quite significant. And then you don't give them a job that they can contribute to society and to the economy, but you actually push them out in many cases and say, well, thank you for studying here, but we don't want to have your brain in our economy. Go and work and do some magic somewhere else. Like, how can that be? Like, really? It's just mind-blowing to me.
It is mind-blowing. And then on the startup side as well, right? We're giving them grants to like create a spin-off, and then we don't actually fund it. So they get either foreign investors to do it or they sell the company, right? So it's the same there. Yeah.
And maybe that's a bit of a stupid question, but the US, at least from the outside perspective, also seems to be quite restrictive of foreigners coming to the US and working there. Is it easier if you just bring your company there, or what is the US doing better there than Switzerland to really also capture the value of their own investments to a certain degree?
I mean, immigration is a very difficult topic right now, right? So who knows where that's heading? But what is definitely easier is what Laurent just mentioned, right? It's everybody is a Delaware C-Corp. Everybody knows how this is set up. It can be done digitally. How equity and taxes are done is Everybody knows it. It's a very investor startup friendly. For everything is a digital service. So if you want to hire globally, there are tools and platforms. If you want to have contracts done, it's everything is much more standardized and digitized to just make it so much simpler. So that part is definitely a huge asset, right? Because it doesn't, first of all, you have no friction as you're building it up. And also for investors, it's no friction because everybody knows how it works. And I think Switzerland has to get there. Either, the AG structure, so we have it today, is really more built for a KMU. It's not really built for a startup that raises financing rounds. Like, you still have to go in person to a Handelsregister and things like that. It just doesn't make any sense. So it's either we need to create some sort of a startup AG version, or we should, I don't know, the EU Inc. is something that's coming up. Either we do that quickly enough, or otherwise, honestly, I still unfortunately recommend founders to just start with the Delaware C-Corp if they're actually serious about raising money in the US and scaling in the US, just because everyone understands it, right? And it works. So yeah, I think that's something that Switzerland could do. We don't even need 2 years for that, right? We could do this in a month, right? We could just set up a new type of entity that's a startup AG, right?
And it's so mind-boggling because in the end, it is a bit like a B2C product, right? The one that is the easiest to use and gives you the best experience, that's basically what you will use as a consumer. So in that sense, it sounds that the Delaware C-Corp and all the digitized processes, like through Stripe Atlas, for example, it's just so easy to do no matter where you are in the world. So that's just your go-to solution instead of having, I know it's horror stories from Germany where you have to go sit there and then the notary is reading you for 2 hours a document and you have to sit in there and listen to it. I mean, come on, like.
For me to make an investment in Germany, I have to have a notary coming to me, see me sign a paperwork, and then send it apostille through Sacramento, the capital of California, and then through Germany. I mean, I'm talking to US investors who are not going to do that. Even they love the company just because they don't even have these processes in place. They don't have time to spend 40% of their time on admin, and their lawyers don't, and their accountants don't, and so they don't do it. Yeah.
And then we're wondering why there's not more VC money flowing into the startups from abroad. Interesting. Another important topic, it also came up about 2 weeks ago. I was moderating a panel where Andy Yen from Proton was there. And one thing that really struck me is he said exactly the same about hiring people from outside, that this is a real pain in the butt to do. But another thing he said was the whole ESOP, participation of employees through stocks in your company's success, that's just unreal because they have employees in every different state almost in Switzerland. And if you want to do a ruling, you need to do a ruling with every single one of them where the employees live. So that seems to be another big topic where the US is doing significantly better and easier things compared to Switzerland, I assume, or Europe in general.
Yeah. And they're the same, right? It's as a Delaware C-Corp, it's the same for everyone, right? And it's just capital gain. And it's also not, you don't pay payroll tax on it, right? And so that is also cookie cutter and really tailored to founders as well as investors. And yeah, that's another thing. That's a huge one, right? Like, if you're taxed on equity that is still on paper, how are you going to do that? Like, there's no incentive to actually scale. So yeah, it doesn't make sense. But that could be also solved with a new structure, right? You could say like, okay, it's some sort of startup AG and the way we tax equity is different than in another company, right? So this could be solved, right? I don't know. You could have a task force in the government that just pushes it through.
Yeah, and it just makes no sense that you tax paper money that 80 to 90% of the case will never materialize. And, even as a founder, I mean, what a bad experience is it that you have to stand in front of your employees and say you can get these ESOP shares or phantom shares or whatever sort of solution you've been going for. But at the same time, you need to explain to them, look, your tax rate is going to go up this year. I know your salary is shit because you're working at my startup. So this is probably not going to be a nice year for you. But, if it works out, you'll make massive money with us. But honestly, 4 out of 5 times, you're probably not going to make anything out of it. So how is this supposed to not turn off anybody to do it and to work with you on it? So I think it's just completely misaligned on the incentive side. But yeah, we have to fix that. And I think that's also part of it.
And the problem there is that then the employees look at the ESOP as like, okay, it's like a nice to have. Maybe it will be a bonus one day, but they don't accept it as a significant part of their compensation because it's so intangible and so unreal, plus has negative tax consequences for you. That's really, really bad because otherwise...
And honestly, they shouldn't. I mean, at this point,
exactly.
Nobody should look at this in Switzerland at least, you should not look at this as a relevant part of your pay. I can tell you so many stories of people I know that, look back now and say, man, okay, the learning experience was great, but I think I could have done 3 times as much money just by going my normal corporate routine because all the promises of the stocks, they faltered at the end of the day. And yes, that is inherent to startups in general, but that you're also being taxed on top of it, I think that's just a complete shame. And that should really not be happening.
In the end, it's all about incentives, right? And at the moment, we don't incentivize employees to go into the risk, have a lower salary and work for a startup with a potential upside. At the moment, the tax incentives we have basically tell you, if you're successful, we take a big chunk of your money that you make there. And if you're not successful, we probably also already tax you on the unrealized gains. So you basically lose double. That's sort of the incentives that we have in the system at the moment.
Yeah, so that's a good part of the startup agenda that they're basically tackling. I love it.
How would you rank them? Like maybe both of you, how would you rank the importance? So if I would go first, I would say probably the ESOP and the hiring outside of the European area is the number one, then pension funds, and then digitizations and lower costs. What would be your top 3 prioritization based on the agenda items?
Yeah, you could also think about what could be done fairly quickly, right? And it feels like coming up with a new structure that's tailored for startup that includes the ESOP, the tax questions, the setup questions, and all of this, some sort of a startup visa, right? That could be specifically for these kinds of companies. Feels like this could be done in a few months, right? Then I think the second one is more incentives for capital to flow into venture. Also that, it's not something that hasn't been done before, right? I have looked into this also while I'm having conversations, with people at the State Secretary for Education and Research or InnoSwiss or some of these organizations. The US, if you look back, they've started incentivizing private capital or pension fund capital flowing into venture capital since the 50s. Right? They are government incentives. Every country has done it. Israel has done it. The Nordics have done it. France is doing everyone is doing it except Switzerland, right? And there's all kinds of models from like debt that is given by the government backed with a bank account. There is like clear incentives that were like matching. So a fund can raise more money and it's matching private and public capital. There is a percentage that they're forcing pension funds to do, right? There's so many ways. Yeah, I don't know why Switzerland is so shy in trying something that everyone else has done before successfully. I really don't know.
Yeah. But what is also a bit mind-boggling there is that even though you have Swiss funds, most of the funds are actually domiciled in Luxembourg or in other jurisdictions.
That's a whole other thing. Yes, we can't even have a Swiss fund structure. That's a whole other thing. Yes.
Exactly.
Yes.
Yeah.
Yes.
Laurent,
and
what would be?
you're paying so much to have some like pro forma person and office in Luxembourg. I mean, I'm going through that process right now. It makes no sense.
Because Switzerland would have the reputation and the brand to pull that off, to be the place where people have their funds.
Yes, would be a great financial market for this. Yes, absolutely. Could even make money off that, right? That would be actually a business opportunity. Yeah.
Laurent, what's your perspective? What's your ranking on the 3 different topics?
Yeah, talent and labor market first, then capital and government efficiency in parallel, because I think I'm not as optimistic as Sophie. I know how slow this happens in Switzerland. So I would try. Sorry, I would try to tackle both of those in parallel and to see which of those streams we can get to perform faster. But I think capital follows to where the talent and the ideas are. So I think this is the most important thing. And then yes, the government currently is a blocker, but I think we can, in parallel to more capital flowing in, actually get the barriers down a little bit. But I think Switzerland is such a great place. We have so good universities. People love the living standards here. If they come from somewhere else, they want to stay here usually. But we just have to be able to keep them here or to even get them here in the first place. So this is for me number one by far.
I just had a conversation with Philipp Stauffer about this, also a Swiss VC here in the US, also investing heavily in Switzerland. And he brought that example from the crypto foundation we created in Switzerland. That was a very quick thing. It was very fast done. It was suddenly the global center for all the crypto companies to get started. I mean, we can do this. And this was fast, right? So, right? We could apply the same ideas for a startup AG version.
And also now, not to bash, but to actually say, hey, there's a huge opportunity when geopolitics and overall uncertainties are on the rise all around the globe. People are even more interested than before to come and relocate to Switzerland. That's like an insane opportunity that we have right now if we were set up the right way to capitalize on that. Yeah.
Fully agree.
So we are almost running out of time, but I have two last questions for you. Sophie, if you look a bit ahead in this funding environment into 2026, what kind of founder behavior do you think we will see more of this year?
I mean, this is not maybe a prediction, but I think it's maybe more of a hope, right? What I said before, hopefully more capital and more funds gives more confidence to founder to actually choose their investors wisely, and really be in charge of their fundraising process much more than letting investors lead that process, right? So in terms of speed, in terms of who gets on my cap table, right? I think I see way too many companies in Switzerland still that have investors on their cap table just because of money and just because they needed them, but they're not actually adding value to the portfolio company. And so that I hope is changing.
I like that. I just see we also got a question on a YouTube comment right now. It's a bit of a different topic that we haven't touched up on. Maybe that's why the question came up, but I'm really curious. Manam Seti asked, what about space? Because space is one of the hot topics, at least in the US, I think, at the moment. So looking a bit, where are we right now? What's coming ahead? Your 2 cents on space, Sophie. And if you have something to add, Laurent, please also feel free to do so.
There's Thomas Zurbuchen, right? Who was the head of NASA, who is, I don't know if you can say something like that on a podcast, but I at least have kind of a science crush on him. It's just this person that is just like, wow, like what he knows and what he has achieved is incredible. And also he has a way of actually talking to you about it that you can get it, which is a very special skill. I mean, he's building now a space center at ETH. I think this is going to be amazing for Switzerland because he's also going to bring very much that NASA plus American mindset. And I talked to him about it. He was teaching at the University of Michigan, and they had a similar issue there than maybe Switzerland, like lots of potential, but still not enough commercialization and scale and not really on everyone's venture capital radar. And so he helped build that for the University of Michigan. And now he really wants to build that for Switzerland. So I don't know, sounds promising. And I think we've already shown with AI and robotics that Switzerland has the capacity to, be really on the global map. So maybe can we even expand that to space? Yeah.
Yeah, absolutely. We also, I think about 2 years ago, we did an episode with him on the Swisspreneur podcast. It's one of my favorite episodes. It was so insightful. And I was literally shaking when I asked him the questions and listened to his answer. It was so cool. It was so good.
So you also have a crush on him?
Probably, yeah.
I call it science crush.
Yeah, science crush, sorry. Yeah, but I think like two things that are about to change or have changed that I think make space so much more of a hot topic right now. The first one is obvious. SpaceX, making space travel actually affordable to a certain extent. I think that's like the fundamental thing that had to happen for space to become interesting again, right? That's the first part. And the second part, and I think, Sophie, you know more about this than me probably, so you can tell me and debunk if you think my theory is wrong. But the second thing that I think happened is we all know that solar is the future, and solar is the future outside of planet Earth, because you can put solar panels that are always facing the sun. You get a much higher return on it from it. But the problem was always, how do you get electricity down to planet Earth, right? I mean, there are techniques, but it doesn't make a lot of sense. Now, what has become the restraining resource on the planet Earth is energy, because of data centers, right? And if you can put data centers in space and put the electricity in space, because data with satellites getting it back to Earth, that's something we know how it works. That is the combination that was not possible a couple of years back. And I think that's why now everybody's talking about space, because all of these puzzle pieces have been there somehow, but now it's feasible to go to space, and it's feasible to build data centers in space, and it's feasible to use the electricity that you generate up, or the energy that you generate up there for those data centers. All of this was not happening a couple of years back, simply because there was no need for such huge amounts of data. And I think that's what's really changing here. So I think, again, Elon Musk is quite far ahead of everybody else on this curve, and it's probably going to take us longer than we thought. But I'm 100% sure that this is one of the big frontiers of the future.
The part that concerns me as a climate investor is that whole like space mining aspect, right? It's like, oh, okay, we have like used up most of the resources on this planet, so now we start. So there's also this component that I feel we have to be very, very careful how we're approaching that. So I'm not only space. So yeah.
We're probably going to have a deep dive on space in one of the next briefings that is coming up. I'm sure it will come up again, and I personally understand way too little about it, so it'd be good to do some research. But it's also a perfect way to end the episode today, because it's basically circling back to the opening that we were discussing about AI and the need for energy. And space seems at least to be a partial solution to that challenge that we're facing. And I think, as Laurent said in the beginning, it's a very exciting time to be alive, but it's also a bit crazy how fast things change and how new challenges come up and are being thrown our way. So in that sense, Sophie, Laurent, thank you so much for being here for the second episode. And we'll be back here in March with a new briefing talking about everything that happens from now until then. I'm sure we will be busy and have plenty of stuff to talk about. Thank you for being here.
Thanks for having us. Amazing.
Thank you.
We hope you enjoyed today's episode. If you did, you can support us by rating our show on Apple Podcasts. This way, we can reach an ever-growing number of aspiring entrepreneurs.